Hello, this is the Chartprofit webcast. Friday 17th of July, we're about 2 hours into the trading day, just over. Looking at the pre-open, this is the E-mini S&P. 2095 up here is the point of control. Most importance currently, we've had three consecutive value areas printed above that, which is a positive indication. We've had recently some aggressive selling here and here. Beg your pardon, aggressive buying, that's green at the top, here and here. As long as the E-mini holds above 2095, it's in a strong price location. Here's the recent activity. We had some selling here, late June. This line here, 2095, that point of control we just talked about. This was a rather aggressive selling day here, and we saw the E-mini heading down to this level, which is 2045, which was the previous point of control, and that was the best level of support that I could find. We saw three probes of that level, none of the value areas printed below it, and then we've seen the rally back, and then we started to see some green, as I just mentioned, and we're back above this level. So as I said, if we hold above here, strong price location. We've seen indications that the breadth is picking up. This is the New York daily breadth chart. The bottom two indicators combine to give us the breadth line on the pulse chart. This one is back above zero, which is encouraging. Percentage stocks greater than their 50-day moving average on New York, at least, still slightly below 50. If that number gets back above, we get a green on the pulse chart. We're not quite there yet. Almost there for Nasdaq. Just see these numbers improve here. Russell 2000, bullish percent numbers above 50. And this indicator, net new highs 25, 5-day moving average in yellow above zero. So this is improving breadth, and certainly on this chart. So we're looking here at the pulse chart, the spider at the top, with the imbalances in green and red from the E-mini profile that we just looked at. If we see those breadth indications improve a little, we'll go from neutral here back to green. That's what I'm hoping for. The momentum on all four stock index charts is negative but heading up. So we can do some improvement, but the first improvement we usually see is green coming in up here on the chart itself and a better price location, so we're back above that level as well, which is the 12-month on the spider at 209.92, which is this red line here on the live chart here. As you can see, the spider's been pretty much in this range all year, but at least now we're seeing some encouraging signs in the short-term analysis, and we're heading back towards the high of the range. None of the important levels have changed on the chart, so Russell 2000 ETF IWM 124.50 is the 7-month here. That's the big support. If the Russell's going to move quickly higher, we'll probably see the half range level here off the June high holding early next week, something like this. But in the longer time frame, as long as it holds 124.50 here, it's in a strong price location. Small caps currently looking a little stronger than large caps, which is usually a positive. 180 on the diamonds is the 12-month point of control. Actually looking at that level today here. Relatively the strongest chart of the four at the moment is the Qs, powering up to a new high here. Technology sector as well. XLK, you can see here, very strong into the week. We'll look on this on the monthly, back to 1998. Halfway point off the 2000 high. That's a strong price location in the longer term. European markets have had a good week. This is the German DAX. Actually, the September contract for the futures, back in a really strong price location above its point of control and the halfway point off the April high. This is the index itself. Hoping going into next week we can hold above these levels here. Strong support now. This is the French index, the CAC. Very powerful rally, brings it back above this point of control at 5,040. So most of these charts that we're looking at back in strong price locations, the technicals hopefully will confirm. UK FTSE 100 index closed right on the halfway point off the April high. Two time levels, points of control on this chart, one at 68.05, one at 65.60. Actually on the cash chart, equally important, This one obviously resistance this week. Hopefully the UK will pick up a little bit next week and print some time above that. FTSE futures, it's actually more clearly the lower time level is the most important, 65.20 down here. And as I say, we're just finishing the week here and just slightly stronger price location above that halfway point. Just other features this week, we're looking here at the sentiment. This is the Ridex, or my version of the Ridex assets ratio, hit an 8-month low this week just here. That is often a trigger, contrarian trigger for higher prices. We've seen a good rally this week. Saw the bear fund assets that I follow hitting a multi-month high just a few days ago. Bull fund assets corresponding to that low in the ratio here. Looking at the public poll from AAII, the bulls percent was actually higher, 30.8, and the bears percent was lower this week at 23.3. But as we saw 2 weeks ago, the bears percentage reached 35.1. That was the high since August last year. So 2 weeks ago, with the net down in negative territory here on a new low. I mentioned at the time there was quite a lot of bearish sentiment present at that point. At the same time, this yellow line here, which represents 4-week moving average of the bears minus the bulls, the net, 2 weeks ago that actually hit a 2-year low at that point. Even though if you look at the price chart, the weekly price chart at the top, really hadn't seen much of it. It wasn't exactly a severe correction, but with this indicator we had a 2-year high in bearish sentiment at that point. And there's bears present in the investors' intelligence data. Bulls percentage this week was lower, 47.3. That's the lowest bulls percentage since October. Bears percent was unchanged. The 4-week moving average of net, again, the yellow line here, 31.9. That's the lowest since October. As is the exposure index, also the lowest reading since October. This index measuring the current equity exposure of active money managers, who according to this indicator are at their most bearish since last October. Quickly look through some supporting charts. This is the T-bond ETF, TLT. The major level, as we know, the point of control at 117.14. Chart's been oscillating around that level. Currently finding it quite comfortable to do that. What we're looking for, the kind of pattern that would give us a clue relative to that level, as we know, is like a higher, sorry, I beg your pardon, a lower high, something like that, or a higher low. Talks about this positive divergence between price, which was making lower lows here, and the price oscillator, which made a higher low at this point. And with this low on the price, we're up here. If the price oscillator could print some time above the 0 level here, see the trend according to this indicator turning up. My hunch is we're going to see more oscillation, and then possibly, I think most likely we're going lower here. That would well coincide with equities getting stronger, but we'll see. It's all inconclusive with price so close to that point of control. And currently we're above it. If you've been following the webcast on a regular basis, you know my opinion of the precious metals and the other commodities. Earlier in the year we saw the rejection here at the major point of control. Then we saw 2 attempts at the halfway point which failed. That's a big clue on weakness. Next most important level was the 24-month in here. We had a failed probe here. As I said last week, just a really weak looking chart. We're on a new low here. We talked about this chart going to a new low, and we're there today. And I've been saying that if anything, the silver chart, SLV, looks even weaker, and we've now broken below those previous 2 lows. Be interesting to see what happens to the sentiment now. We're heading down below those major points of reference. You know, I don't like oil either. This is USO, United States Oil Fund. That 16-month point of control migrated higher to 2024. Price action following that migration wasn't encouraging in here, and then we've broken below the halfway point off the March low, and we're on the lowest level since late March currently. This is UNG, the natural gas ETF. Interesting that the 18-month point of control is exactly at the halfway point off the April low. Off here to here we've got the halfway point. That's where the 18-month is, so we've got a very good point of reference on this chart. That's 1373. And on the DBC chart, the commodities ETF, I looked at this a few weeks back. This was a weak sequence of price Probes into the 18-month, which is exactly at 18. So 2 failed probes and consolidation below that level, and we're coming weaker on this chart currently as well. So not surprisingly on this chart, the dollar index looking quite strong. The big level is 95.22, which is the 12-month. We saw this kind of higher low above that level, and we've been monitoring this level as well, this level on the dollar index chart, which is the halfway point off the March high. Dollar index is above that as well. That's stronger price location. So the dollar is looking pretty strong in here. Just quickly run through the daily forex charts that we look at. We don't like the Australian dollar. It's below that major point of control at spot 76. Support, 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 support. Then we failed here. So this is really weak looking chart to me. Euro FX chart as well. 113.40, this 12-month point of control, probed in May and June. We'd be looking for this kind of price action to look at the long side at these kind of levels. That's not what we're getting. We're getting a weaker euro here. Pound is relatively stronger than that. It's still probing this 12-month this week at 156.70. So that was the dailies and the time support resistance levels. This is long-term monthly charts. Now what I've done here is inverted the scale. So this is dollar against the Australian dollar, and you can see on this long-term chart from this high way back in early 2000s to this low. Here's the halfway point, and this chart has been consolidating above that level. This is bullish for the dollar, and we're now breaking higher, so that's strong US dollar in there. This is dollar against the pound. Again, it's inverted, so as long as this halfway point holds, the dollar is in a strong price location. And looking at the euro chart, so this is the dollar against the euro. Again, inverted scale over here on the right, from this high way back in the 80s to this low, and here's the halfway point. And generally on this monthly chart, we've been consolidating above that level. Looks like this if we zoom in on the monthly chart, or like this on the weekly. So until those charts start breaking those levels, I'm assuming strength for the dollar, and therefore likely further weakness for the commodities. But we'll continue to monitor those levels. Equities moving into stronger price locations. We need to monitor these levels as well. This is the spider, so the time support and the halfway points. And if we can hold or consolidate above here, we'd be looking for breakout higher. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.